Yo, hello everybody. Welcome to another episode of Simply Bitcoin IRL. Today's guest is Luke Broyles. Been a huge fan of some of his threads that he's been dropping. We're going to explore all that. I'm really looking forward to this conversation. But before we start the show, I want to give a shout out to the awesome Bitcoin companies that make this show possible. SwanBitcoin.com, best place to buy Bitcoin, built by Bitcoiners for Bitcoiners. They incentivize self-custody. If you haven't already checked it out, visit swan.com today. And of course, the biggest Bitcoin conference on the face of the planet, Bitcoin 2023, hosted in sunny Miami Beach, Florida, May 18th through the 20th. And you could use the promo code SIMPLY to get 10% off your tickets. Anyways, no more delay. I want to bring up our awesome guest, Luke. Thank you so much for joining us today.
Yeah, happy to. Can you hear me?
Yes, I can. I can hear you perfectly.
Great.
I love your setup. It looks like you're outside.
Yeah, I only if it was warmer. No, I'm on my front enclosed porch here. So, yeah.
Okay. Awesome. Very, very cool. Anyways, Luke, I'm a huge fan of some of your threads. And first of all, I want to talk a little bit about like the psychology of it. So you went from being relatively unknown, right, to being projected into the stratosphere in the podcasting world. You were invited on Preston Pish's podcast recently, right? So, and I'm sure you're going to make the rounds at some of the Bitcoin conferences as well, from what I'm hearing. And, yeah, man. How has that been like? Was it kind of surreal for you to just, because usually most people, they're well known for a while and then they built it up and then they take off. But
Yeah.
it was very quick for you. How did that feel like?
Yeah, it's been very strange. A large part of my Bitcoin education, I would say, was from podcasts, videos, and listening to folks. I never really got that much out of reading books, frankly, when it came to Bitcoin. I did much better with hearing the ideas spoken by the authors, especially, Jeff Booth, Michael Saylor, and a few other folks, especially, very key for that for me. Lynn Alden was one, Greg Foss was one, and a few other people, too, that really helped solidify it in my mind. And so it's been very strange. The strangest part has been the fact that these people are sort of like these online personas that you are just used to watching and like listening to, and then all of a sudden one day it's like you're interacting with them, and it's like it's all still virtual. At least most of it's still virtual. So that's very strange to go from a passive place of listening to the same dozen or 2 dozen voices, and all of a sudden it's like, oh, like half of them I'm talking to now. So anyway, that's been one of the strangest parts. It was really cool to meet Greg Foss. I met him 1 or 2 weeks ago in person, and it was really funny because we talked about a lot of things that aren't about bonds and Bitcoin too. So that was kind of funny because he's like the exact same in real life as he is online with everything. So that was quite enjoyable to meet him and get to talk to him. And I'm looking forward to as your sponsor is the Bitcoin conference. I'm looking forward to that to meet more people. So that's been the strangest part. But besides that, another strange component has just been how quickly people have been supportive online. That's been very nice to feel that to a certain degree I'm helping people. I would say probably most of the help has been helping people that are early Bitcoiners and new Bitcoiners understand the significance of it. Although there's a lot of no coiners and pre-coiners that have expressed that whatever I've said or something I've said has been of help to them. So to have all that positive feedback has been really, at times moving, and in general, it's just been very encouraging and very exciting. So yeah, but yeah, it was definitely extremely fast, and almost everyone keeps saying how fast it's been, and it's definitely been quite a lot. So yeah.
And your example, I think, is a testament to how different things work now, right? And how society they don't really judge you based on credentials anymore. It's just raw proof of work. Did you put in the work? Do people appreciate that work? And whether people appreciate that work or not determines a lot, actually, right? So could you talk a little bit about that, right? Because I think that phenomenon is very interesting because we've lived in a world that wasn't the
Yeah.
case for a very long time. You needed the credentials, you needed that, the stamps of approval, so to
Yeah.
speak. And now the internet's just like, nah, you don't need that anymore. So what are your thoughts on that?
Yeah, that's a great point. I would say that I can fully agree with that. It's very strange how much attention I've gotten and how little my credentials have mattered. And frankly, if I had thought about that earlier, I probably would have started posting online and Twitter and talking much more publicly than I have, because I thought, okay, I don't have a degree in economics or in monetary history, and so who's going to want to listen to this 23-year-old blabber and rant online about technology and the pace of change and everything? That's why I thought very few people. So I didn't do too much. But to your point, it's been a non-issue for folks, and it has sparked a little bit of thought more than it's already been going on in my mind. But I think the reason for that is because previously in the past, we didn't have this thing called the internet. We didn't have this constant 24/7 communication 365 days of the year. And so what did people do? They more or less offsourced the application process and the critical thinking process to schools. We don't have the time and ability to exert all the resources necessary to vet all of these candidates and all of these people and their backgrounds. So we're going to have these institutions have their stamp of approval and these pieces of paper that basically verifies that, okay, this person's legit. But now that we do have the internet and now that we do have online instant communication, it's almost as if that instead of people offsourcing or outsourcing, it's becoming much more paramount, much more towards the front. It's like right now, anyone can, for free, go online and read basically all of my views on Twitter. And you couldn't do that 30 years ago. You'd have to do much more work to do that. And so I think that's an interesting transition, that with the internet, it makes the access of information more accessible to people like me. I don't have to go to college to learn all of these things necessarily. I can learn a lot of it online for free. I don't have to go to college to learn about Bitcoin. I can learn it about online for free. And then not only just from the workers or employee side, but also from the employer side, it's easier because you don't have to rely on an institution to give a stamp of approval. You can just look it up yourself. So it's interesting how it has different dynamics on different ends. And really, really my rise, more or less, on Twitter, or at least the couple of threads I did that went viral, is more or less a stamp of approval of the idea that the world is changing faster and faster and faster. We've less in common with the future than the past. For 500, 800, 1,000 years, however long you want to define it, that was the way that we determined who's educated, who knows what they're talking about, who doesn't. And now it's like for the first time in the last millennia, we have this new way of defining who's educated, who's right, and who's not. And obviously, the number of followers does not equate to the intelligence of a person. I don't think anyone should take anything I'm saying seriously because I have, a few thousand followers. I think they should take the ideas at face value and think about it. But I think even though it's not a direct correlation, I think a lot of people take that indirect correlation. And so anyway, those are just some off the cuff thoughts about that.
You're right, and it isn't a direct correlation, but you can. I definitely use Twitter. Twitter is a very effective filter, right? And you can know a lot about someone very, very quickly based on their Twitter profile. So I agree, and there's different ways to like hack the growth hack, where like you tweet out specific things, and obviously you're going to grow a little bit faster, right? But the people that just use Twitter without the growth hacking and they're just putting in their work on there, I think it is a good representation of how valuable your work is, right? I think because you think about it, like more people follow you. Anyways, I want to talk a little bit about one of your tweets here. It says, quote, "There are infinite amount of assets to be chasing a finite amount of Bitcoin. It doesn't matter how much Bitcoin you own, you'll be able to buy things. It doesn't matter how much of anything else you own, any amount of Bitcoin will eventually become worth more." Few understand this, or few understand.
Yeah.
What do you mean by that?
Well, that's a good question. I was this is one of the thoughts that for me really hammered at home. And I think this is one of the things that most people, I would argue even most people that own Bitcoin, don't yet appreciate the probability of this idea occurring. So I'll speak the idea first, and then my guess of the probability of it unfolding. The idea is that with every other asset, every other technology, every other system, everything we've ever been able to do, there's a way to make more of it. There's a way to increase the supply of that thing. So right now, real estate, I'm in a beautiful spot right here. There's all these beautiful lake homes. There's like 3 more houses being built. Granted, there's a more or less finite amount of lakefront property, but we're able to build more and more houses, and we're able to be bigger with more stories and more square footage. And who's to say in the future, when we use 10 times 50 times more energy globally, that we can just make more lakes and make more lakefront, who knows. But even real estate, what's often considered one of the most difficult assets to make more of, one of the slowest assets to develop, even real estate, we're always able to make more real estate. And then obviously everything else to a lesser degree, you have gold, you have cash, you have stocks, you have cars, you have all these other technologies and things that are more common. It's obviously easy to make more and more of those. I mean, most people don't realize it, but the vast majority of gold in the world has been produced since 1950. I forget the exact percentage, so I don't want to say that, but you can look it up. It's pretty easy. I think it's 2/3 or like 3/4 or like some really absurd percentage of gold. It's just been the last 70 years, and gold's been the global store of value for thousands of years, and the vast majority has just been created in the last few decades. And so basically the question there is, well, what if the amount of gold we make in the next 70 decades dwarfs the total supply of gold we've made in the last 70 years? And then what about the 70 years after that? And again and again and again. It's like an exponential curve. And as we progress further in time and the rate of technological improvement gets better, that curve just gets steeper and steeper. And so the farther out you go into the future, to me, it seems logical to assume that the total supply of any given asset only increases exponentially, whether we're talking about gold, whether we're talking about real estate, or we're talking about people's access to food. I mean, like, this is a good, wonderful reality. It's good when housing becomes more abundant. It's good when food becomes more abundant. These are good things. And so the main problem we're in now is that, we're looking back and we're at the very top of this exponential curve that's led up to us. And now we're looking forward and the curve only gets steeper. And so the problem is, how am I going to save my money? How am I going to save my economic purchasing power, my energy, my brute force physical costs I'm exerting onto the world? How am I going to save that into the future? Because I can't save it in gold, because the total supply of gold is just going to continue to get dumped on faster and faster and faster and faster into the future. I mean, really, the best case scenario for the total supply of gold globally shrinking or diminishing or staying flat is some sort of catastrophe, or we have a major war or famine, or, I mean, it's like, either we're going to have hyperabundance of everything or a complete collapse. I can't see any other middle ground there. And so the question becomes, okay, if we're going to be
hold
optimists,
on a second. Hold on a second, because you
Sure.
buried the lead right there. You said that it was either hyperabundance of anything, or what was the other one?
Like just collapse.
Why? Why do you say that?
Well,
why is it so binary? Why is it one or the other?
Yeah, okay, that's a good question. I would say the reason is because that's exactly what we've been doing for thousands of years, and that the momentum is moving so quickly of technological change that if it were to slow down, it's because a force greater than that momentum will have had to stop that momentum. So the economic incentive, and the monetary incentive, and the societal incentive to continue technological progress in all facets of life is so great right now that the force required to slow that to where we don't have that hyperabundance would have to be so great that to me it's basically catastrophe. So that's the basic idea there. And I mean, I think beyond that big picture idea, I think it's also true if we look at specific examples. Like if we look at food production, I mean, if we don't increase global food production by X percent, we'll have some sort of global famine in, a couple decades, because the population is growing at an exponential rate. We're having so many babies, and the population is growing so much, especially in places like Asia and Africa, that if we don't have that continuing abundance of food and real estate and energy grid and all and medicine and all these things that we need more of, well then we've pretty much baked in some sort of crisis down at that point. And then on top of that, layer of not enough resources, then you have the political instability. That if you have this increasing population and the technology isn't able to keep up with that, well, then not only do you have the just general shortage, but then you have these political institutions all fighting against each other, war and everything of that sort. And so, anyway, that's the basic idea there. I don't think it's possible to have an exponentially increasing population and somehow feed them all and house them all and stop the momentum that we're currently on and avoid some sort of disaster. So I'm not saying I know what that would be, but that's the basic idea. I don't think there's a way to do both. I don't think you can have global prosperity and global, lack of prosperity without some sort of disaster that gets us from one to the other. So that's why I view it more or less as binary. And perhaps I'm wrong. Perhaps there's some third option, but I don't know what it is. So
Yeah. So let's talk a little bit about the transition, right?
yeah.
I think a lot of us feel it. We have a live show every day, so we're slaves to the news cycle. So we're in this very unique position where because we have to cover the news daily, we see the ominous clouds moving ever so slowly closer to us. I do believe that it's going to be a little bit darker before it gets brighter. I do believe that it's going to. I agree with you. I just don't see how. Did you see that tweet by Lynn Alden, where she and it was like a parabolic tweet, and she basically posted like, this chart is real. It's the amount of debt that the U.S. government will have, and it just goes on forever. And then you're like in 20 years, like how could they pay for this? So is that what you're referring to? Opti, if you could be so kind, could you pull it up so we could show everyone visually?
Yeah, that'd be great.
Luke answers.
I'm laughing because it's so bad. I don't know which chart you're talking about. I don't know if you're talking about our exponential interest payments or exponential CP. Yeah, that's not even the one I thought you were talking about.
No, that's not the one. That's not the one. That's not the one, Opti.
Oh, okay. Yeah, wrong exponential chart of impending disaster. Whoops, let's find the right one. But yeah, to your question or to your statement, I think you're probably right with how it gets darker before it gets light. Although I do think it depends on what worldview you're looking from. So, people often like to compare the United States to Rome, which I guess has, an eerie number of similarities, but I don't know if it's the best example. But either way, like if we look at Rome, I mean, yeah, if you were in Rome, it just got darker and darker and darker until Rome collapsed. But I mean, other places of the world actually did quite well during that time. And why was that? It's like, well, it was getting darker and darker in Rome, and so people were leaving and going to these other places. And like I talked about in Preston's podcast, it's like this whole cycle of empires and why one rises in the ashes of the other. It's all demographics, it's all technology, it's all, it's just all basic incentives. If you have one empire, you have one political system that's beginning to deteriorate or is towards the end of its deterioration, what are people going to do? They're going to flee to the new system. They're going to flee to the new political regime, and they're going to take all their intelligence with them, all their talent with them. And of course, frankly, a lot of the people that leave first are the ones that are the most ambitious and the most talented. And, essentially what you do is you like kickstart this hyperdrive of abundance and production, well before the collapse has fully occurred. And so, yeah, I do think it'll get darker, but I think it depends what paradigm you're looking from. I think if I don't know if they pulled up the chart yet, but if we're looking from the perspective of the current more or less global political reserve currency system being, treasuries, cash, petrodollar, whatever you want to call it, I mean, I think it's just going to get darker. And I probably shouldn't say that with a smile, but I don't see any other path forward. I mean, we had that other chart that we took down a minute ago of CPI. We have this one that's just as exponential and just as catastrophic.
This is what you're describing. Like, this is what you're describing, where it's basically binary. Things don't break. You know why I didn't see it, Luke, is because we're in the thick of it, right? And sometimes, especially when you're looking at history, it's really difficult to zoom out. It's really difficult to get a perspective on things sometimes.
Yeah, it definitely is. And I think that's one of the most difficult things for people to do is to realize where they are in history. And really, the people, if you look back in history, the people that make the most money, not that that's the most important thing in life, but the people that make the most money, the people that are the most prepared, and the people that, more or less make the large legacy for themselves are those that solve the problems of tomorrow. The people that solve the problems of tomorrow, the problems that don't even exist yet. Those are the people that really have an impact. It's not even the people that solve today's problems, it's the ones that solve tomorrow's problems. And I think as this curve of technology gets steeper and steeper and steeper, that's only going to become more important. Like right now, if we were to picture the ratio of people that are solving today's problems versus the people that are solving tomorrow's problems, I would say most of the Bitcoiners are in that latter group, solving tomorrow's problems of the world that is manifesting into existence quicker and quicker. But I think as that curve gets steeper, that ratio is only going to get larger and larger and larger. And in the future, I think the economic, financial, and societal incentive for people to only continue thinking about the future if they're working is only going to get greater, because the economic incentive will only grow, and the amount of time it will take to get to those problems of tomorrow will only shrink. And so there's just lower risk and projecting forward to that. And anyway, that's more of a larger idea, but yeah, going back to the chart there of the debt obligations of the U.S. or what was it? You mind pulling up that chart again? I'd like to look at that.
Yeah,
one more
absolutely.
time.
And it makes it
I think that
good
ties it up in a
laughs.
bow.
It makes for good laughs, right?
Yeah, and that's not my chart. That's not Lynn's chart. That's the official chart, right? Do I understand that right? From the
Yes.
Treasury? Yeah, historical and current policy projections for debt held by the public, 1980 to 2096. Historical projected. I mean, it's like it's laughable. We're 100% now. They're saying it's going to be 700% of GDP by the end of the century. And it's like, that's today's numbers. That's assuming we have zero wars, we have zero recessions, we have zero lockdowns and zero diseases. We have zero more interest or desire to create entitlement programs. It's like this is their own admission of just how absurd it's going to get. And I listened to a little bit of Jerome Powell's testimony before Congress. What was that, just yesterday? Goodness, that feels like forever ago. But I was listening to a little bit of it, and he was like, yeah, basically everything's fine as long as we raise the debt ceiling, and yeah, that's okay. It's very strange that people can listen to that and not feel that the training wheels are coming off of the bike, and that we don't know how to ride it. It's quite funny. Basically the idea being that, yeah, the debt level is sustainable as long as we can expand it forever. It's just, the only thing that gives the dollar its value is that it's scarce in relation to other things in the world. And when people begin to lose faith in that, and when we have to release the valve a little bit and cause it to expand so it doesn't pop, what you're doing is you're decreasing societal trust exponentially until people just don't anymore.
100%. Let's talk a little bit about the consequences of this clown world stuff, right? I think when you were talking, this tweet that you said really resonated with me. It says, quote, markets feel increasingly disconnected from reality because the ledger at which you price those assets is increasingly detached with reality, math, and the law of conservation of energy. The problem disparity isn't in the asset, it's the currency. Wake up, Bitcoin. Now, and I would even say that it's not only markets. I think that this has a psychological effect on people as well. And I think that people in here, because a lot of people don't understand, and I'm sure you understand, Luke, right? Money plays an essential role in human society. And if that money is disconnected from reality, I think there's a lot of consequences to that I think a lot of people don't fully appreciate.
Yeah. I think a lot of that just comes to our brains, frankly. One of the reasons I talk so much in my threads and my videos about how human brains like to think in linear terms, I think that's really important for people to understand, because sometimes the impression comes off from Bitcoiners, I think, that, oh, you're just stupid, you don't know what you're talking about, Bitcoin's going to take over. And it's, whether that's true or not, I think at the end of the day, it just comes down to psychology. And I think it just comes down to what human brains are good at doing. And human brains are really good at predicting the future based on a given set of rules. I'm used to a day being the same length of time. I'm used to the seasons being the same length of time. I'm used to having, this needing roughly the same number of calories every day. Our brains are hardwired to think about the future based on a set of presuppositions that remain constant. at a linear rate. And this problem, this beautiful thing with technology, it's exponential and things get better exponentially. But the problem or the downside of that is that we face the inevitable transition costs of these paradigms upgrading at a faster and faster rate. The internet is one of those examples that, just 25 years ago, the world is entirely different. And most experts 25 years ago couldn't predict how different the world is today, and are laughably wrong in one direction or the other. It's because our models basically break down, our assumptions basically break down, and our envisioning of the future world basically breaks down because it goes against our brains. It goes against our intuitive thinking. And so, yeah, when it comes to money, we like to look out in the world and we like to think, okay, this house costs this number of linear units, linear political currency units. And, that works on a day-to-day, week-to-week, month-to-month basis. But when you start zooming out and looking at the whole picture in logarithmic terms and not linear terms, all of a sudden you realize how flawed thinking that is. And so regarding that tweet, I don't know if we could pull that back up again, but
Absolutely.
but back to that idea, the essential idea I'm trying to hammer home there is that right now, most people, just every day, not even within Bitcoin, you're like, oh my goodness, the real estate market is so hot. Oh man, I can't believe stocks are so high. Stocks are going to crash. Oh man, this is crazy. That's crazy. What's going on? Why can my business not find people to work for me? Why are there so many people doing this? And why are politicians lying so much more than these, or perhaps even more importantly, getting away with the lies and much more bold lies? Why is all this happening? And the point of the tweet being that as the ledger we price everything within becomes corrupted, our perception on those things becomes corrupted. And so then we assume that those things are corrupted. Like right now, real estate, is very, very hot. Prices are crazy high. Prices have gotten more in the last 2 years and the couple years before the recession, the great financial crisis in 2008. I mean, it's like prices are astronomically absurd. Most people know it. Most people cite it. Most people talk about it. And people assume that therefore the housing market is a bubble and it's going to crash. And that was true in 2008 and before 2008. And I think it's true today to some degree. However, what if the majority of that bubble, both in 2008 and today, is actually in the currency itself? What if real estate is not in the bubble? What if stocks aren't in the bubble? What if the bubble is the currency at which you're valuing those assets in? And that's a really important distinction, because if the asset itself, gold, real estate, stocks, whatever, if the asset itself is the bubble, then what happens? Well, it comes down in price and it crashes or collapses. It's the end of that era. But if it's currency, it's the bubble, and that bubble continues to grow because we have an artificial issuer of said bubble, aka said currency, at a centralized point that can just continue to distort reality eternally. Well, then it's the crash, quote unquote, is the precise opposite. If it's the asset that's crashing, it crashes in terms of the currency. If it's the currency that crashes, it's the asset that just crashes up forever, denominated in that currency. So anyway, it's a very difficult thing to explain to people, but in my experience, I've never seen somebody that's understood this principle that's ever been able to unsee it. Because you're like, oh my goodness, it makes perfect sense. Why the everything bubble? Why are stocks and why are all these assets going up exponentially? It's because the currency is being devalued so fast. And if you look into the future and that changes your entire view of what the future will look like, and that changes your entire actions. And it forces you to realize, oh, wait a minute, Bitcoin is not this asset that's becoming more and more of a bubble going up exponentially. It's the value of the dollar in relation to it that's going down exponentially. And I really went into that in a couple of my threads, but hopefully I made my point there, that it's that distinction that is so hard for people. And I think at the end of the day, it's just because our brains, including mine, take a long time to shift thinking. Like for me, it took years to understand this.
Yeah, and the analogy that I always use, and I know exactly what you're talking about, Luke. And the analogy that I always use on simply to describe this phenomenon is I call it the Fiat Matrix, right? You spent most people have spent the majority of their lives in the Fiat Matrix. So when they get unplugged and they get disconnected, or they change their operating system to Bitcoin, you have to look at totally your perception of reality changes. All of a sudden, you can afford things. It's not a matter of whether you can afford things. It's how long do I have to wait, right? If you work hard and all that good stuff.
Yeah.
Anyways, so you mentioned something there, and it reminded me of this tweet, right? You said you're not an idiot if you don't understand Bitcoin yet. And here you said, but considering that Bitcoin was designed to force asset prices towards zero, has been fulfilling that for 14 years, and that there is zero competition, you're an idiot if you don't allocate just 0.12% just in case. Why 0.12%?
That number is completely, I mean, it's more or less arbitrary. That's part of the
That's
longer
not
thread.
enough, Luke. What's going on?
Yeah, no, I went into it the whole thread of how I talked about how, basically what I did in that thread, for those that haven't read it, is basically I said, okay, here's today's current wealth distribution. Okay, and here's the current number of Bitcoins remaining and will ever remain. And I simply put the two together and I said, okay, if your net worth is this, I just ranked a whole bunch of levels of net worth and it was like, okay, 0.1% was an allocation of a, middle class, comfortable, 800,000 to $3 million net worth, something like that. I don't remember exactly, but it was like, okay, the point of my thread there before that being that, to your question earlier, like if Bitcoin is a closed system and if it's like a Mona Lisa with a finite frame and there's only a fixed amount of, square inches within this system, it's like, okay, well then if you compare that to the exponentially increasing supply of everything else, eventually whatever portion of that closed system you buy will inevitably become worth more than the rest of it. And that's kind of the idea that we were talking about or briefly mentioned earlier. And so then that's the basic point there, that it's like even a 0.1% or 0.5% or 1% allocation theoretically should be enough to protect the rest of your portfolio. Because let's take a simpler number. Let's say 1%. If you have 99% of your net worth or your monetizable value in real estate, stocks, bonds, fine art, cash, treasuries, whatever, 99% versus 1% in closed monetary system, the name of it's irrelevant. We happen to call it Bitcoin. If that's the case, then as this ice cube shrinks more and more and more exponentially, and this one absorbs that value that's being lost, eventually the value of this becomes greater than everything else. And so the basic point there in that thread being that, you don't have to understand Bitcoin fully. You don't have to go all in on Bitcoin. You don't have to, take out a loan and buy a whole bit. You don't have to buy a certain amount of Bitcoin. It's just when it comes to allocation, most people don't realize that Bitcoin is not something that you add to a diversified portfolio and it's part of this blah, blah, blah. And like, no, Bitcoin's designed to negate the need for a diversified portfolio entirely. And so if you have this little diversified portfolio, and if we assume Bitcoin is a technology that is trying to make it irrelevant, it's like it's survived for 14 years. It's fulfilling every prediction by its early founders that it would have. It has, 99.873% uptime, something like that. Ridiculous. It's like there's no competition. And if this thing merely continues to survive, it will become like a global monetary singularity. And so, like I said in that thread, I try not to mock people or ridicule people or put people down that don't understand it. Like, I know most people don't understand it. And frankly, most people aren't going to understand it for years. But if you look at something and say, like take the internet, if I say to you, the internet, this is a big deal. It's going to absorb all global communications networks. It's like you think you're safe with your bookstores and with your Kodak stock and your Sears stock and, it's all your stocks and your diversified assets and all these things. It's like, who knows? Maybe the internet fails, but the fact it survived, in Bitcoin's case, for 14 years with zero oversight and is only getting stronger and only will continue to get stronger and more decentralized and more difficult to stop and more difficult to censor. It's like, you don't have to understand how this new thing works, whether we're talking about Bitcoin, we're talking about the internet, we're talking about the locomotive. It's like, if you don't just take a tiny, minuscule amount of your allocation and put it in that just to protect the rest of you, like think of it like insurance. It's like, I think that's a really, really bad idea. And this is one of the things that Greg Foss talks about, that why I like him so much is because, he's from the bond world. And so he's from that deep, deep traditional finance world. And he talks continually about how risk managers are making one of the greatest mistakes of all time and not allocating to Bitcoin. Like a 0% allocation to Bitcoin is so much worse than a 1% or 0.5% or 0.1%. Anyway, I've made my point, but that's the basic idea there. That the visual of that chart might be nice too. That goes back to an earlier idea of what we were talking about regarding the two paradigms.
Yeah, 100%. I'm gonna pull up the visual because
Yeah, sure.
I love, people really appreciate the visual. So let me pull it up. And yeah, look, of course, you're preaching to the choir here, and I'm like, yeah, I absolutely 100% agree with you. But I think it's the way that you describe it that really resonates with people, Luke.
Yeah.
So here it says, for audio listeners, it says continued 90% losses, faster and faster forever. And then the old world is already technologically ancient. And then it's this idea of this exponential growth. And then would you say this you're talking, this also applies to technology, right? Like, and I feel it, right? This is like, I think 20 years from now, or 20 years, I'm a little bit older than you, Luke, but like, 20 years ago, when, I was a little kid and I was watching VHS tapes, I would have never imagined, having this software where people could just communicate through video hundreds, if not thousands of miles away from each other instantaneously. And then at the same time, live stream that to all the corners of the earth, via the internet, right? So is that what you mean? Or is this only referring to a specific thing?
No, that's definitely referring to all technology. One of my favorite metaphors, or comparisons, is probably better than metaphor. One of my favorite comparisons is the internet, just because, like, most people, even my age, can't deny just how painfully obvious it is. One of the things I talked about in Preston's show and a couple other shows is, like, take the internet. We are still in the early days of the internet. And again, because we think in linear terms, we don't think about that, because we're just looking at our own life and we look backwards and we think, look at how much my life has already changed because of the internet. We forget to think about the future and realize it's only going to change, that the internet is going to cause our lives. It's only going to get more dramatic. Today, roughly 60 to 65% of the world has internet access. So there's almost half of the world population doesn't use the internet. And, oh, by the way, we're going to add another couple billion people to the global population over the next few decades. So it's like, theoretically, the total number of users of the internet will easily double just in the next, decade, 2 decades, 3 decades, pick a number of years. People smarter than me could map that out for you. But it's like, people think that, it won't be a big deal until it's already everywhere. And, I would disagree with that. I think, again, using the internet as a comparison, by the time the internet got to 10% global adoption or 15% global adoption, it's like it already changed the world. It had taken hold of, like, a whole younger generation with social media and everything like that. And now we're, at the roughly 2/3 mark, or just under the 2/3 mark. So anyway, I think Bitcoin is going to be a similar way. I think that most people are going to ignore it because they think that, oh, that's, whatever, maybe that's way out there. But the problem is that the internet took roughly 30 years. Bitcoin's roughly 14 years in. And because its compound annual growth rate of adoption is so much faster than the internet's at its same age and at its same number of users, that the curve is going to be much steeper than the internet. And so, even frankly, by the time I think Bitcoin's at 10% global adoption, it's like the world will look so different than it does today. It will be almost recognizable. I don't think one has to wait 30 years or 20 years to see massive declines in the current system and massive explosions of growth in the incoming system. And so, kind of like how earlier I was talking about how it depends what paradigm you're in, whether the world's getting darker or getting brighter, kind of like that orange line and the red line in the chart, in my chart that you pull up. I think it's like the same idea. I think if we're looking from the perspective outwards from the political currency unit system, I think today is literally the darkest day if we're looking backwards.
Hold on a second.
Sure.
Hold on a second. Before you keep going to that, because that was my next question. Political currency unit. What do you mean by that, bro? And why did you call it that? I'm gonna pull up. While you answer that, I'll pull up the Samson thing, the Samson Mao thing that you retweeted.
Okay, sure. Why that term? Yeah, people love that term. It's funny because I wasn't intending that to be this big term people would start using, but people love it and they're posting it. And I don't know if I was the first one to come up with it or not. If someone could find an earlier one that said it, because I don't remember where it came from. I don't remember the moment I either thought of it or found it. So I may not have come up with it, but I don't remember. But anyway, the basic idea being that all money is energy. Gold is energy. Gold is metallic energy that we've monetized as a form of money. what is real estate? Well, real estate's a consumer good. It takes energy to make, and we've monetized that. Take the cash in your wallet, or the IOUs in your bank, the digital money in your bank. What is that? Well, it's also energy. It's also monetized. But how do we define that? It's not, the energy is not in the paper. The energy is in the political regime and the political system that backs that paper. And so it's like the US dollar or the euro or the yen or the yuan or any other currency, any other fiat currency, what people typically call fiat currency, really is basically just you're owning a portion of the ledger of that bank, of that central bank, of that government, and that government survives as a function of its political influence on the world. And so when you own US dollars, why are US dollars in such demand? It's like, well, US dollars around the world are in such demand over other fiat currencies because the political might and strength of the US Army and the US Navy and the US Congress and the US Constitution is much more globally dominant and much more powerful than the rest of the world's nations. And so, if you own a euro, if you own euros, you're basically reliant on the political energy of the Eurozone and the continent we call Europe. And if you're reliant on the US dollar, you're basically dependent on the United States of America. And so that's the basic idea there, that you're owning the energy of a political system and you denominate that in currency units within that system. And so obviously the problem becomes then that political regime wants to issue more currency units to pay off its debt, and that weakens the overall political energy of a system. So it's like a double whammy. You're having debasement and dilution of the number of units in your pocket, and simultaneously they're reducing their own global political influence. So that's what it's like, two exponential trends on top of each other. It's like a super exponential decline, where not only is the total political influence declining, but the relative value of that political influence on the global stage is decreasing, and your share of that global pie is decreasing simultaneously. So hopefully that makes sense. But that's the basic idea.
It makes total sense, but I want to focus on this last part, right, where it says dark times as well as bright end of the tunnel ahead. And because I want to go back to that, because it sure doesn't feel like right now, Mark Moss calls it peak centralization, right? It sure doesn't feel like the political influence is decreasing. I would say that it feels like it's peaking, if anything. Like this is, I don't think we've ever seen government as big as it is today. So are you saying as time progresses and more people migrate to a Bitcoin standard, that's when the political influence, like that's when politics kind of takes a back seat?
No, I think it's true today. I think it depends on your frame of reference. You said that it feels like the political is peaking. Well, it's like, well, you could say it's peaking, but you also could say it's about to be dwarfed by whatever's next. It depends on your frame of reference. Yeah, looking backwards over the last 50, 60, 70 years, like political influence globally is like more terrifying than it's ever been. However, if you look forward the next 30 years, I hate to say it, but I think that we're in the good times, say, quote unquote. I think whatever level of centralization or corruption in this current paradigm is only going to be worse in the future than the past. And if instead of viewing the world as getting darker and darker because we're looking at it from this political lens, we look at it from this other lens, I think the world's getting brighter. I mean, take Bitcoin as an example. Its hash rate is either at all-time highs or near all-time highs. Its price is currently in a bear market, but its current price is above the all-time highs of 2017, by a considerable margin, and its trading volume is considerably higher. I mean, it's like, like right now, besides price not being an all-time high, pretty much every metric for Bitcoin's at an all-time high. At wallet addresses that have one Bitcoin's at an all-time high. The number of nodes is at an all-time high. The amount of hash rate is at an all-time high. The number of nations that own Bitcoin on their balance sheets is at an all-time high. The number of nations that have it as a legal tender is at an all-time high. It's like, for Bitcoin, it has never been in as good of a spot as it is today. And I think looking forward, it's like today are the dark times for Bitcoin. It's only going to get better. So I think everything you're saying is correct, but I think it depends on perspective. If we're looking in that one perspective of the red line that goes down at continued 90% losses forever, it's like, looking back, it's never been worse, but looking forward, it's never going to be as good as it is right now. And that's why it's so important for people to get off zero, because you have these two lines, the one that's going up and the other that's going down, and the disparity from the one line decreasing to the other line increasing only gets larger. So right now, the difference is not very much, but continue it out a few years, the difference will get much worse. And then, as it just gets more and more exponential. So, say if we go out 20 years, or go out 10 years or 15 years, or however many years you want to, if we assume that the current system is much more corrupt than it is today, much more centralized and with much more information and much more chaos than it is today, and we also assume that Bitcoin is doing much better than it is today, not just price, but also like the network and the network stability. It's like the transition costs for people trying to escape the one and get into the other. It is just it becomes only more difficult. It's kind of like transitioning from newspaper to online web articles as a media company in 2000 versus 2005 versus 2010 versus 2020. It's like the transition costs of you migrating your audience from one medium, from one paradigm to the other medium and paradigm only gets exponentially more difficult. And you don't know at what point you're going to go bankrupt, but inevitably you will. It's just a matter of when. And likewise today, it's like inevitably Bitcoin will take over everything else, I believe. It's just a matter of when. And the probability of that happening, in my view, will only go up exponentially. And the transition cost of moving over will only go up, which is why I think it's completely idiotic to have a 0% allocation. Like, it's been 14 years. How many more years do you want? It's like, if you're a risk manager, how many more years do you want under Bitcoin's belt? It's like, the Federal Reserve is barely a 30% uptime, if not even that. Bitcoin is up like 24/7, 365 with zero audits. The Fed is like zero audits, and Bitcoin has an audit every 10 minutes. It's like, it's very concerning. And I genuinely think most people are going to learn the hard way. Most people will learn, but they'll either learn through giving it an extreme amount of thought, kind of like how we're doing now, and then they'll be transitioned before it's happened, or they will be forced to learn through the brutal nature of creative destruction. And I think the people that should be making the transition right now are the precise kinds of people that will make the transition too late. Because again, if we think of this from a psychology perspective, okay, financial advisors, money managers, hedge fund managers, and people that manage political currency units have been trained for thousands of hours to understand how the political currency unit system works and where its risks are and how to allocate for risk within that system. They are not trained to think outside the system. They are never trained to think outside the system. It's like, I've given this metaphor before, but I think it's worth saying again. It's like taking someone in the early 19th century, the 1800s, that has been breeding horses their entire life. They went to school for 4 years or 8 years, or perhaps even 12 years to learn how to breed horses and make better horses, stronger horses, more beautiful horses, whatever your metrics are for determining the best horse. They've been trained for so long to make the best horse that when you present to them a locomotive, it has no indication to them of being of something of value. And it's not because they're stupid. It's just their brains have been trained for thousands of hours to not recognize that. They aren't being trained. They aren't being trained with the question, how do we get the most number of people from point A to point B in the most efficient manner possible? They've been trained, how do I make a better horse? And those are two very different things. And likewise today, I believe our brains and our money managers that have been trained for decades to how do I diversify my purchasing power in a mixed basket of assets, securities, and consumer goods to lose the least amount of purchasing power possible as our currency basis. Like, that's what they're trained to do. They're not trained to think, how do I find the best money possible?
Yeah.
Yeah.
Holy cow, man. You're on fire, bro. Okay. So I want to focus on this thread. And I think this is your most well-known thread. I want to start off with this, right? So give me 1 second. Here we go. There we go. All right. So
loving the comments, by the way. You have a great audience. I've seen some of them.
That's always the dangers of the live show, is the live chat.
Yeah.
Oh man. Okay, so this is YouTube. It says, how much Bitcoin to get rich? Fund your lifestyle. How little Bitcoin to protect yourself against inevitable inflation, bank runs, and fiat demise? Are you too late to Bitcoin? What would a 1% allocation do? Let's run through the mind-blowing Bitcoin math. And the reason I saved this till last is I would I loved having this conversation with you because I think you explained a lot of the concepts that you used in this thread. So, I mean, I'll ask you like point blank, like, are we, and I think a lot of people perceive that with Bitcoin being currently sitting at $21,989, do you believe that, again, like people's like, I'm too late to Bitcoin, I missed $100 Bitcoin. What would your response to them be?
Yeah. So that thread title is a little clickbaity, I guess, and that's partly the design. But really, if you read it, it really, I'm trying to do two things here. The first thing is to calm Bitcoiners' nerves, because frankly, a lot of people in Bitcoin are extremely paranoid, and they think they don't have enough, or they think they're too late, or they think whatever. And my first point with that thread is like, calm down. Like, I don't like, not even I don't think any of us realize like how early it is. And I don't mean that in terms of getting rich, like, oh, you're so early, you're gonna make, but no, I mean like as early as like, okay, you're safe, you're okay, just from a means of self-preservation, not a means of excess luxury. Then the second point is also the reverse for people that aren't exposed to that, to kind of like pique that little curiosity and a little gentle, loving little bit of fear and existential dread. Um, because the way I would describe Bitcoin is that it's basically an insurance policy. Um, if we think basically Bitcoin is like a premium free form of insurance on everything else, as far as the monetary premium on everything else, all monetary premium in cash, real estate, gold, silver, oil, whatever. It's like Bitcoin's basically an insurance policy on that. And so if we think of all of those things declining, the insurance keeps going up. The value of the insurance keeps going up. And so I think the best way to put it is that basically an insurance policy is completely worthless until the moment it's worth like everything. I mean, that's why 2008, the great financial crisis, GFC, happened so quick, is because, you had all these mortgages that were going bust, and more were going bust. And then all of a sudden, all the insurance companies and all these rehypothecated packages that were insuring against it, they all began going bust. And it's like all of a sudden you have toxic assets plus nobody's able to cover. It's like that's when you have compounding risk, and everything's so fast. And so I think the way to put it with Bitcoin is that it's just going to continue oscillating virtually near zero for a very long time until something happens and it just reprices to what it should be. And I think people get caught up in the noise, but it's like, it's all noise. $1,000 of Bitcoin, $20,000 of Bitcoin, $3,000, $60,000, $400,000, $200. It's like it's all noise. Like if we say theoretically, like there's many great pieces of work out there that say Bitcoin should be, $10 million, like in today's purchasing power. Hal Finney in 2009, 1 week after Bitcoin's existence, predicted Bitcoin could be $10 million, which today, adjusted for inflation, it's like $25 million. Greg Foss thinks 2 million is ridiculously cheap. I think, probably 5 million is cheap. Michael Saylor's talking about 5 million. I mean, if we just pick a number, a clean, easy number of 10 million in today's current purchasing power, and we view it like an insurance policy, the way you could put it is that basically the political currency system and the diversified portfolio of assets, consumer goods that have an exponentially increasing supply, if we view that as like a house that's slowly burning down and less slowly burning down because it's burning down at an exponential rate, like how a house is burned down, and we call Bitcoin that insurance policy on that. Well, right now the insurance policy is trading, let's see, if we just say $25,000, that's 0.002 cents on the dollar, something like that. So, I mean, Bitcoin could go up by a factor of 5, a factor of 10, and still be like a cent on the dollar or 2 cents on the dollar. So anyway, the point with that thread, and my general point in emphasizing both of those dynamics of how much Bitcoin does it take to get rich and how much does it take to protect yourself, the point either way is that Bitcoin will probably continue to trend up with time. And then there'll probably just be a moment or a day or a brief period where the free market or a series of free markets begin to realize that this is a risk off asset and not a risk on asset. And that's the moment I'm concerned about. I think that's well a ways away. But I don't think, I think pension funds and nations and large corporations will realize that before people do, before average people. Granted, there are people realizing it now, but I think the mass of people will not realize it until that insurance policy is already gapping up to where it should be. So anyway, I kind of went off the rails there.
No, you totally didn't, man. People are loving it in the chat. You're blowing everyone's mind. So yeah, so then why is it, why is it, and I know you answered this, right? Which is people think and they think linearly, right? But why is it that, some Bitcoiners believe that they don't have enough Bitcoin? And I'll follow that question up with if you wanted an upper middle class lifestyle, how much Bitcoin would you need to achieve that? And of course, and this is total speculation. We're spitballing here. This is not financial advice. You guys.
No, none of this is financial advice. Yeah. Go buy a bunch of treasury bonds on a negative real yield. Yeah, do that. No, I'm kidding. For the second question, let's look at the chart I pulled up. So I don't know if you want to pull it up when I'm answering the first question.
Yes.
But for the first question, why do people feel that they're always too late? It's again, it all comes down to perspective. Right now, if you're like me and you're relatively new to Bitcoin, you're the last of the party because you're looking back. People 5 years ahead of you, 10 years ahead of you, they were all so much earlier than you. But again, look the other direction. Look forward to the future. Roughly 1 in 3,000 humans on Earth actually has a Bitcoin address, a wallet of their own Bitcoin and their own keys, their own storage. It's okay, yeah, sure, you could be sad that you weren't here in 2014 or 2011 or 2017 or 2019, however recent or far back you want to go. But it's okay, you're still the first out of 2,500 of the 3,000 people. It's okay, let's say there's 5 million hardcore Bitcoiners today, which I think is probably true. It's okay, there's another 4.99 or 4.95 billion plus the growing population, plus the fact that global prosperity should increase over time. It's people think they're too late because they're looking backwards, and it's just people need to calm down and step back and have conviction in the long time frame and realize that, oh wait, I'm well within the first percent of adopters, and well within perhaps even the first 5% of the first percent of adopters. But for the people that aren't within Bitcoin, they hear me say that and they're oh, so it's early, I have time, right? It's maybe, we don't know. Again, by the time Bitcoin has 5% global adoption, we don't know how dire the situation will be for the fiat fractional reserve system. We don't know what does 5% of the users of a fractional reserve bank selling all their political currency units away from their bank and into Bitcoin, what does that do? I don't know, but it's not good. I can tell you that. So anyway, those are the metaphors I like to use. But yeah, I think ultimately what it comes down to is that people outside Bitcoin are looking at its price and they think, oh my goodness, it's never been higher. And it's okay, but you could go back to literally any point in Bitcoin's history, and that's true. One of my favorite models is that Wicked Smart, that Twitter guy, Wicked Smart Bitcoin. his model of Bitcoin's hyperbolic adoption trajectory and then overlaying price over that is one of my favorite examples, and I put that in my thread, I believe. But it's because it's basically the same thing. It's Bitcoin was $1, and people thought it's a bubble, it's a scam, it's going to zero. It crossed $100 in 2011, and people thought it was over. I'm too late, whatever. And and people thought the same thing at $1,000. They thought the same thing at $10,000. They're taking the same thing now at $20,000 to $70,000. Probably in 2 to 3 years, Bitcoin will be at $100,000, $200,000, $150,000, and people will be saying the same thing. Oh, it's a bubble. Oh, it's too late. I should have been buying at $15,000. Why wasn't I buying when all the Bitcoiners tell me to buy at $15,000? And then it'll crash, and then they'll pat themselves on the back oh, I'm so glad I didn't buy that. And then it'll go up again. It'll be $500,000, $800,000, $1 million, and they'll be saying the same thing oh, I'm too late. And it all comes down to perspective. It's because it's if you're entering in the year 2029 and you look back, you're the last one. But look forward ahead, you're still within the first 5% of adopters or whatever it is. And so I think it's just going to continue. I think Bitcoin will be trading at 15 million US dollars, and a significant portion, if not the majority of people, will still be saying to themselves, oh, it's a bubble, I don't understand. People are just scared because the dollar's it's a threat to the dollar. And it's people might think that's crazy, but I think that level of cognitive
dissonance,
hypocrisy and dissidence is just going to continue forever until that line of thought will have completely, utterly been shattered violently by the free market.
Yeah, you definitely don't want to be the last in that line of people thinking that either. Okay,
Yeah.
so Luke, so the second part of the question was, how much
Yeah.
Bitcoin do you believe will be necessary to achieve upper middle class in the future?
In today's terms, I mean, any amount.
Mm.
The value or the cost of what we call, oh yeah, here's that chart. Let's watch this first real quick. So yeah, that white line
Opti, could you
is,
zoom in a bit?
yeah, that'd be great. This is not my chart. This is cited on there somewhere. Yeah, we're smart. Yeah, so the orange line obviously is Bitcoin's price. On the left-hand side, we have linear terms. On the right-hand side, we have logarithmic terms. Human brains like to think in linear terms. Technology likes to operate in logarithmic terms. So we look at that orange line, and it keeps going up and crashing up and crashing up and crashing forever. And because we view the political currency unit of choice as our constant, we think it's a bubble that's just expanding forever. Like, oh my goodness, it must therefore collapse. It must therefore die. And we don't wonder ourselves, what if it's actually the dollar that's declining in relative value at an exponential rate forever, because we can just continue printing an exponential rate of currency units forever. And so that's the basic idea here. I think genuinely Bitcoin will continue to skyrocket and appreciate and then crash and sideline continually forever. And I think the sooner one realizes that, and the sooner one realizes that nothing fundamentally is going to change with Bitcoin, and any point in the future, theoretically, it's like, okay, so you're telling me, it's almost indescribable how different it is to everything else. Because unlike every other currency system today, the larger they get, the higher risk they become, because the incentive to corrupt the ledger becomes greater. But with Bitcoin, it's the precise opposite. The bigger Bitcoin grows, the lower risk it gets, and the upside increases. It's like when Bitcoin was 5 days old, its upside was much less than it is today. Or I did an interview with Greg Foss recently, and like he said Bitcoin today at $20,000 has a higher upside and lower risk than it did at $1,000. It's the same idea, because the information, as Foss describes, the information has changed so much that it's become a better asymmetric bet, and I would say a better asymmetric bet on the future of humanity. And I think that'll continue, perpetually forever. As the one system declines and the other increases, I think that's true forever. So anyway, that's my basic point with that. And perhaps that idea is wrong. I don't know how it's wrong, obviously. Otherwise, I wouldn't believe it to be the case. But I yet to find somebody that can convincingly give me a counter argument. And that's the reason why I think I'm so knowledgeable about Bitcoins, because I really tried to prove to myself that this thing was stupid. And I couldn't. It's like every argument I threw at it, I just had to cringe, be like, oh, that's not right. That doesn't make sense. Like, oh, censor. No, I can't. Well, okay. Well, then it's not backed by anything. No. And anyway, and I think most people have to go through that route. And they're either going to go through it by giving it a lot of mental work and eventually realizing at the end, or they're going to have to experience their portfolio of everything else just decline in Bitcoin relative terms forever. So
yeah, and it's funny you say that, because when I started my Bitcoin journey, it was the same thing. It was like I was looking forward to arguing with someone that would prove me wrong on Bitcoin. And I spoke to a lot of people, right? People that worked at huge investment banks and whatever. And the only talking points they had back was talking points they heard on the media, right? None of it came from
energy. Yeah. Energy, censorship, not backed by anything, no intrinsic value. It's like
they're going to ban it.
It's like the same 8 arguments, and it's so, frankly, it's ridiculous to me. And that's why I said in that one tweet we looked at earlier that you're not an idiot if you don't understand it, but you're an idiot if you're not at least paying attention to it, because it's like everyone is saying these same half dozen arguments or so. Like everyone, every news station, it doesn't matter if they're a broke college student or they're managing $100 million. Everyone has the same 5 or 6 cognitive biases against this thing, and we just keep repeating them to ourselves. We put it on our TVs, we put it in articles, we have our PhD economists, just keep retouting these things, and nobody questions, what if those aren't true? And I think that's gonna be a really harsh awakening. So anyway, I made my point there. But anyway, I know we're getting short on time here, but you had that other question about how much Bitcoin. I don't know if we want to pull up that chart or we want to talk about that at all.
So if why don't we end it with that last question, right?
Sure.
So the question for anyone who's listening is, how much Bitcoin do you need to to live an upper middle class lifestyle? How much Bitcoin
Sure.
do you need to save in order to achieve that? So, Opti, do we have a chart?
Yeah, I was in that thread. It's higher up. But yeah, like I was saying earlier, I think any amount, because the cost of what we today call an upper middle class lifestyle should only go down in time. You know, if we think about 100 years from today, the amount of luxury and comforts that I have personally will be much cheaper to my grandkids 100 years from now than is for me today. In the same way today that I'm living a life much more luxurious than Rockefeller did, even though I'm much lower in total global society than he was, obviously. It's the same idea. So I think any amount is the correct answer, but most people don't have a time preference that long. So yeah, I don't know. I think scrolling up perhaps on this thread, it's like a spreadsheet. It's a chart. Yep, up. Yep, that one. Yeah. So yeah, again, all I did here, and a lot of people didn't like it because they thought this was too bullish or whatever, but all I did here was I said, okay, if we assume there's 16 million Bitcoin left to be exchanged, which I think that's really conservative. I think it's much less than 16 million, but let's say 16 million, but that's generally agreement of the upper end of the spectrum of predictions. Like, okay, if we think there's roughly 16 million, and we take a current Pareto distribution of all global wealth and prosperity, ranging from people that have $1 worth of assets to their name to people that are 100 billionaires and, you know, corporations and nations, trillionaires, multi-trillionaires or whatever. You know, if you create that spectrum, this is more or less what you get. If we assume there's 10 mega rich entities that each have roughly 140,000 Bitcoin, which there's already multiple of those. You know, the US government's one of them. Michael Saylor's one of them. There's a few others that are probably up there, and we all probably know who they are. But, you know, if just to conserve 10 number of entities get their hands on that many Bitcoin, and then let's say 200 other nation states or mega corporations around the world. There's roughly 200 nations in the world and many other large corporations in the world. You know, 5,000 billionaires or so, 65,000 other corporations, 80 million millionaires and middle-sized companies, and then all the hundreds of millions and billions of other people of different classes. I don't really like that word, but, you know, for lack of a better term, you know, I mean, you pretty much do the math and you assume it's going to be distributed between them at roughly a similar distribution of today's wealth. I mean, that the numbers get pretty absurd pretty quickly. You know, people think, again, it all comes back down to your perspective and your numerical bias and your psychological bias. Most people think they're too late because one Bitcoin costs $20,000. And it's like, do the math, like in this spreadsheet has been done here. And it's like, you realize if this thing survives, it's like, of course, you're not going to own a whole Bitcoin. Virtually nobody is going to own a whole Bitcoin. It's like, it's like the odds of you owning a whole Bitcoin. Like, just say, statistically speaking, you're a random person in the future in a theoretically hyper-Bitcoinized world. It's like the odds of you owning a whole Bitcoin or a tenth of a Bitcoin or even 1% of a Bitcoin are crazy low. And so, you know, it's because people are thinking in terms of Bitcoin. They're not thinking in terms of sats. You know, it's like you could exchange like what, 4,500 sats for $1. I mean, that to me seems really cheap because I think one sat should be worth more than $1. But anyway, yeah, what amount of Bitcoin should a person have? I mean, I think that depends on their time horizon. I think it depends on what their net worth is currently. I think it depends on what their risk tolerance is. I would say personally, I think Bitcoin's lower risk than the majority of other financial instruments. In fact, I think all of the financial instruments, but that's my perspective. But yeah, I mean, I think most people, again, it's all perspective, right? Right now, someone that has, you know, I don't want to say too much here, but, you know, I get messages from people in other parts of the world, non-Western parts of the world, you know, the developing world, and they have 1% of a Bitcoin, or they have, you know, a few $100s worth, and they ask, what do I do? I'm too late. And without trying to, as politely as I can, I try to explain that, you know, it's just your psychology messing with you. You know, it's like if you own 1% of a Bitcoin, like that's so much money. You know, again, to go specifically in the math for people that perhaps are listening audibly, you know, let's see, if we go, you know, like a millionaire or a company, you know, like the average company in the future might own 6% of a Bitcoin. It's like, that's kind of crazy, especially when you keep in mind that probably the average company of the future will be able to channel much more energy than the average company of today. You know, if we take an energy company, they have, you know, what they use coal and natural gas what if an energy company of the future uses fusion and fission and has other means of energy we haven't even conceived of yet, and their entire balance sheet is like 8% of the Bitcoin or 10% of the Bitcoin? I mean, it's like it's completely preposterous. So yeah, one Bitcoin's a lot of money. 1% of Bitcoin's a lot of money. 100,000 sats or 250,000 sats. I mean, it's like it's all a lot. It's just a matter of how many years in the future do you want to go.
Yeah, 100%. Luke, man, thank you so much for joining us on Simply Bitcoin IRL. That was quite a rabbit hole. So many people in the chat saying, you're making them incredibly bullish. And what I would take from today's conversation is, and that really resonated with me, is the fact that human beings think in a linear fashion, and people do not grasp, or maybe you could even say that just the human brain wasn't designed to grasp exponential growth. And I think I do agree with you. We're on the verge of that. If technology is, and I think that is to me the biggest proof, right? Look at the exponential development of technology, the internet, cell phones. If I told you 20 years ago, I said this during the show, right? So Luke, thank you so much for joining us today. Why don't you tell everybody where they could find you online and what projects you're working on these days?
Thanks. Yeah, if I could have one more thought to what you just said.
Absolutely.
I think a parting thought would be that Bitcoin's compound annual growth rate for adoption is 80% faster than the internet. And we all know how fast the internet adoption was. So when we keep in mind that the internet is only at 60% adoption, that Bitcoin is growing 80% faster on an annualized growth rate, and whatever is next after Bitcoin is just going to be faster, I think that's pretty convincing as to why everyone should not have a 0% allocation to Bitcoin.
Amen. So. Amen to that.
Yeah. Now, where am I online? I'm on Twitter. That's where I am most of my online time right now. At Luke_Broyles, like you see in the screen there. So, yeah, that's where I am on there. I just got an Oster, kind of exploring with that. I do have a YouTube channel. People can find me on YouTube. I have not really promoted that at all, so it's gotten a decent bit of views for me, so that's kind of cool. But I really go into the full presentation, narrating some slides I don't have on Twitter at all yet. So yeah, YouTube and Twitter are the main places. I hope to be doing some other cool stuff in the future. I'm going to Bitcoin conference in Miami. I'm going to Mass Adoption in Boston, coming up here in April, I believe, mid-April, and a few other projects I have on the back burner that I hope I can finish later this year or early next year. So, yeah.
Awesome. Well, dude, thank you so much for joining us today, man. Really, really appreciate it. This has been quite a blast. Thanks, Luke. Appreciate it. Guys, thank you so much for tuning in to another episode of Simply Bitcoin IRL. We'll be back tomorrow at 12:15 p.m. Eastern Standard Time for Simply Bitcoin Live. Love you all. See you on the next one. Peace out.